Hey, Colorado Springs, Chris Lopez here, and we have another deal analysis to run you through. And of course, I have my co-host, Jenny. Good afternoon. How are you doing?
I'm doing great. How are you doing?
Doing really good. I always love doing these because it's always fun to talk with the client when we can, but also talk about the deal. And fortunately, today we're able to have the client and investor on the podcast with us. So who do we have, Jenny?
Yeah, so we have Garrett Dilly with us today, and he is an investor in Colorado Springs, and he owns a handful of rental properties.
Garrett, welcome.
Hey, Chris. Thanks for having me. Appreciate it.
All right. So before we give a little bit about your background, Garrett, I made a mistake here. I didn't give a one or two sentence teaser about the rental property. So I'm gonna let you do that, Garrett. And then
Sure.
we'll get about your background. So give us one or two sentences about your rental property, kind of set the stage for what you bought down here.
Okay. This one is it's a 3 bedroom, 1 bathroom, single family home, and it's in central Colorado Springs.
All right. Perfect. So Garrett, tell everyone just some quick background about, who you are and what your goals are, like what your investing strategy is.
Sure. So I guess in terms of real estate, I'm a newer investor by far. I have been one of these people that is very interested in savings and sort of living below the means to try to do as much on savings as possible, and then always looking for ways to invest that money. So I've looked at a number of different areas, but real estate is one of the things that continues to come up and has continued to come up for me. So if I think about when I actually really dipped my toe in that, it was actually a number of years back. I was a silent investor on a flip in Denver. Unfortunately, the organization that I knew one of the people, and unfortunately, they decided afterwards. So it worked out very well. It was a great opportunity, and I was essentially a lender, silent partner. Right after that, their strategy was morphing, the market was changing, and they decided that company split. Essentially, the partners went their own way and started their own separate things. So there didn't continue to be an opportunity. But looking forward, my next sort of step in was really to start to get into long-term rentals, buy and hold rentals. And I wanted to do that, but I was very conscious of the fact that time was an issue for me at the time. And so I did the typical thing that people will do for this. And as we had been moving to a new home, I kept the first home and turned that into a rental. So I did that a few years ago, and that property I still hold in Denver. Now, I would say, really in earnest, got into real estate and really started educating myself about the latter part of the summer last
Okay.
year. That was when actually, it was interesting because I happened to be trying to learn as much as I could. I was listening to your podcasts. I happened upon a podcast of Jenny on Bigger Pockets
Oh
from
yeah.
a few years back. And I literally, that was, less than 9 months ago, probably, that I listened to that. And, that got me really thinking. And so I started to really put things together on terms of what do I need to do to take the next steps. I was able to situate a few other things in terms of where I was spending time and really put that time into there. In terms of what I'm, focused on is really building up a portfolio of rentals. Um, and the Colorado Springs market made a lot of sense for me. We had just moved south. That made a lot of sense for me. But it also obviously, is a very interesting market with, I think, a lot of potential behind it. So that brought us to today. And actually, in the last, from that time, I think I probably spent a couple months really trying to educate myself, and then got invested toward the end of the year. And since that time, I've added 2 properties, one of which we'll talk about today.
All right. Well, coming into, this property, We know it's a 3-1 rental. I'm going to put in here as an investment property. So let's talk about the hunt as you look for this property. Like, what was your high level parameters as you started hunting for this property that you now own?
Yeah. So I was looking pretty broadly at single family, small multi, and condos, townhomes, with a bent towards single family. I also was looking in these neighborhoods that were priced a little bit below other things that seemed to be showing significant uptick in sales and sales numbers, et cetera. So those were some of the criteria that I used to kind of identify areas. Obviously, I spoke with Jenny quite a bit because early on I didn't know. I was really trying to get, and being new to the area, I was trying to get my arms around more specifically the pockets, and so that led me to identifying a handful of neighborhoods, I would say. And through the prior purchase, I learned quite a bit more, and through the conversations with Jenny. So that's really what it came down to, was identifying good neighborhoods that I felt were had that upward potential, and then also specifically focusing on the single family.
Okay, and so this property, what was it listed for, and what did you end up going under contract at?
Yeah, so it was listed for 250, and we landed up going under contract for 263.
Okay, so put that in the purchase price. And Jenny, let's talk about the offer, because I know this was a little bit more unique in the way you guys are able to structure the offer in terms of using cash and financing. So what was the offer like?
Yeah. So correct me if I'm wrong, Garrett, but I think we offered 257, I believe.
Originally, yep.
Yeah. So then I was just in quite a bit of communication with the listing agent saying, look, this meets my client's needs. We're giving you a cash offer. What do we need to do to win this offer? And she said, 263 and it's yours. So that's pretty much how that transpired. But what Garrett was able to do, he was able to utilize cash to purchase the property, and then he did what's called a delayed financing on the back end of it. So shortly after he closed on it, he was able to go through a lender and pull out a majority of the cash that he outlaid, and it's as if he were to originally finance it, but in reality he did it this way instead. So he was able to basically craft his offer in a way that it was more competitive, it was more appealing to the seller, but then on the back end he was able to utilize leverage. So it was kind of the best for everyone in that situation.
And typically when it comes to delayed financing, I think it's like 25% down payments required. So should we put 25% down payment here for the down payment?
It actually, in this case, turns out to be 23. And that is the unique point here. It was 25%, but it was of the appraised value. So the property actually appraised above what we got it for. So it appraised for 270, and the loan value was therefore set at 2002,500, which meant that relative to what we were paying for it, it was only 23% that was being brought to the table.
So, I mean, this is great. So, hey, you're in a position where you could use cash. Obviously, you want to deploy it and hold rentals for long term in cash.
Yeah.
A great use of cash that way. But hey, use a cash offer to get the property, turn around, use delayed financing, and since the appraisal came in higher than the purchase price, it meant you had a lower percent down payment in there. So that is great. So you snuck out with a few extra dollars in your pocket. Acquisition cost here, I mean, what did
They
you
were
for acquisition
about,
cost?
yeah, 69.50, 69.55, I think was the number. All in with, yeah, all in.
with the loan cost though, right?
Yeah, exactly. Yeah,
So
there you go.
I'm just going to put that in because this spreadsheet has the loan cost for Joe in here. So about 6,900 altogether for closing costs, about $60,000 down. And then for seller credits,
There were no
how does
seller
it go
credits.
to, sorry, when we come to seller credits, a lot of times this is what happens during the inspection process. So, hey, you go under contract, you went there with cash. Did you do an inspection since there's a cash offer, or did you waive it?
No, absolutely did an inspection.
Didn't think so.
Yeah.
So Jenny, anything pop up on the inspection?
No. So there's a couple areas that warranted further research, I would say. There was some lag bolts with the carport that were a little questionable. Some of the siding looked potentially as if it had some rot, and then there were some just hairline cracks in the foundation. But Garrett was able to get professionals over there during our inspection period still, and they were able to basically say everything was fine as is. So we were able to just kind of move past that.
All right. So, I mean, that's great. And for initial repair cost, what did you need to do for initial repair cost?
So in this case, I did put a washer and dryer in. The total all in for initial repair cost was $24.89. But that was because I did take the time at the time when we took it over to put the washer and dryer in, so a new washer and dryer, but also replaced one set of doors and some blinds. Just these kind of things that would probably work as they were, but would probably be regular maintenance issues in the future. So we went ahead and took the opportunity to clean them up. And there was also some paint touch up wrapped into there, a couple fixes on the fence in the backyard, little stuff primarily, but.
So, I mean, $2,500 for a washer, dryer, and some of the rent ready stuff, that is a very, very low amount. So this property sounds like it was in great shape.
It is. Yeah.
And then so you're all in for just under $70,000. Now, what did you get in terms of your interest rate on your mortgage?
That was 3.5%.
All right. And monthly rental incomes, I know this came up, I think, higher than you originally had planned, right?
Yes. Yeah. So when I started underwriting this, I was thinking, and certainly I was in conversation with Jenny as well, and I was thinking more around that 14 to 1450 range was more likely.
Yep. And then what did it come in at, though?
We were able to get 1500. And looking back now, I should have tried for more, but yeah, I'm quite happy with that. I think that was actually good.
I think that tends to be the trend that I've been wrong on the last several properties that my clients have purchased in the best way possible. So, we go in with kind of a conservative estimate, and then we kind of test the market a little bit afterwards, and it seems to be working out.
But that's always the best way to do, is always be conservative, and you want to be
Mm-hmm.
pleasantly surprised versus the other type of surprise.
Yeah.
So for vacancy, you'd like to run down 3% in the springs, right, Jenny?
I do.
All right. Rent increase, appreciation, just keep those at 3%.
Yeah, I think that's fair.
Okay. And then property management. So are you self-managing, or do you have a property manager?
No, in this case, I am using property management.
Okay. And what's the approximate monthly fee you have ballparked in there?
It actually is 10%.
Okay.
So that's what I use. Yeah.
And what do you run for monthly reserves?
And I actually did set that at 8%. Yeah.
8% too? And I'm assuming no HOA?
Nope.
Okay. What about your taxes?
Taxes were 810.
Oh, there we go. Insurance?
And insurance was, I think, 916.
Okay. Water, sewer, and utilities, are you paying that, or are your tenants
Those
paying
are
that?
all tenant paid.
Okay. So I'm going to delete all of this stuff out of here. All right. So going over the cash flow tab, we got all numbers inputted here. Purchase price of 263. You used delayed financing. It reappraised at 270. For all in between down payment, rent and ready costs, closing costs, you're at just under $70,000 all in. Gives you a estimated rental income of about $18,000 for the year. Subtract out vacancy and all the operating expenses. You're at a net operating income of $12,500. Subtract out your mortgage payments, and you're cash flowing about $1,600 a year. So just over $100 a month. What is your reaction to this number, Garrett?
I was pretty happy with that. That was really the kind of thing I was looking for. And obviously there were some puts and takes in this one. Price was a little higher, but so was the rent. And but overall, I'm pretty happy with this.
Jenny, what's your reaction to say $100 a month in cash flow?
I mean, I think that's pretty good around here, especially this year in which this was the year that Garrett purchased this property. To have $100 a month in cash flow, that's a pretty good return.
So looking further down, it's a 2.3% cash on cash return, a 4.7 cap rate. I mean, so this is, these are good numbers in the current market, what we're seeing down there. Now, Garrett, in terms of like your long-term investing strategies, how does this piece play into your longer-term goal of, building wealth and just, being able to enjoy life more?
Yeah. So I think, my idea is to build a portfolio of these. And I like, this is a good, whatever you want to call it, base hit, double, base hit. It's not, it's not a grand slam, but it's great. It actually it brings me closer to being able to meet that objective of building that portfolio. So for me, it was a milestone as much as anything, as was the last one. It was starting to take that, those initial steps, and learning. I mean, the learning has been immense. So it's been fantastic. And Jenny has educated me a lot on many different areas, and I've been able to really, start to hone in on certain things that maybe I wasn't aware of before. In terms of what this does in that portfolio is, really as I see a portfolio effect occurring, I really feel like there's the advantage to be able to, longer term start taking some of these, the finance down, packaging things up a little bit, et cetera. So maybe, paying some off by, getting a snowball going on these by some of the cash flow that's cumulative across the properties. To me, that's, that will really meet a lot of, a good part of the objectives.
So, Jenny, in terms of like this property in the current market, give it some context, because I mean, Garrett's not going to retire with his cash flow this year. $100 a month is nice, but it's not life-changing for anyone.
Yep.
But in terms of context for the current market, and also just that longer term strategy, and Garrett's is a very common strategy. Hey, I want to go out there and start building wealth. I know real estate's a great asset class. I want to start, getting more real estate into my overall portfolio. From your perspective, Jenny, how does this property work in those, in that bigger picture of the market, and also just longer term wealth building?
Yeah, I think that this property was a fantastic addition to Garrett's portfolio for sure. Something that we didn't talk about is that this property is probably worth about 280 now, and we're not even in May yet. So, he's making a lot of, he's earning a lot of benefits within this property. First off, it's a beautiful home. He has it on a set it and forget it type of strategy right now. He has it being managed, and he's still cash flowing. He doesn't have to worry about anything. He doesn't have to drive up to the property and take care of things. He has it leveraged. So he's able to take advantage of this extremely low interest rate and have his tenant pay off his principal payment on this. And then not to mention just kind of riding the wave that Colorado Springs is experiencing in terms of appreciation right now. We've had this conversation before. I don't know how long it's going to be this dramatic, but I think that it can consistently be decent appreciation. But yeah, he's, earned almost probably 17,000 in appreciation in 4 months of owning it. So that's a pretty good return if you ask me. So he could turn around and leverage that later down the road. So he's just, it's a great property. It's in an area that is experiencing a lot of growth. I personally have a property in this neighborhood as well, and I have a lot of confidence in the future of this particular neighborhood and kind of where that area is going. So I think it's a perfect piece to his puzzle for sure.
And Garrett, in terms of just your personal strategy, I mean, one of the benefits of the markets right now is just we do have a high appreciation rate, which does give you opportunities to tap an equity down the road.
Yeah.
I mean, are you going to be more of like a hold it and pay off guy, re-leverage it, sell it? Like what do you forecast down the road with this property and just with the current market conditions?
Yeah, it's a good question. I'm keeping the table quite open, to be honest, Chris.
Yeah.
But I think in terms of, where some of the things that I would like to do is I'm a very passive investor right now, as Jenny indicated. This is really one that I, purposely have spent a lot of time thinking about how can I get this so that it'll be as hands off from me at this point in time in my life as possible, with the view and the vision towards in the future that that limitation maybe not being as tight, and possibly taking a slightly more active role in investing in real estate, meaning the potential to either harvest what's in there by selling and 1031ing up to something else beyond, or just to move in another direction while I keep these going and pay down. So I'm keeping the options open, but I think one of the things that's of interest to me in the future as well is really continuing to learn this area. But I like land development. I like the idea of it. I think Colorado Springs lends itself to it well. I saw a lot happen in Denver over 20 years and really learned a lot from watching that, without my hand in it. And so I think there's some lessons there that can be brought to bear within a market where we know that there is a population moving there. This is it is will the appreciations continue the way they are? Probably not, but there are some good demographic metrics that seem to be suggestive of a future in Colorado Springs. So,
hey, ride the wave of growth.
yeah.
A lot of wealth can be built that way.
Yeah.
All right. So to wrap things up, Garrett, the podcast is a great way to network. So I always like to ask people, what is a great way for people to connect with you? And are there any types of investors or vendors or people that you want to network with as well? If you do, mention on here because there's a good chance they'll hear you and reach out as well. So first question, how can people connect with you?
Yeah, I think the best way is email. I'm not huge on social media, LinkedIn a little bit, but mostly via email. And in terms of, I think getting started in earnest in this through the pandemic, obviously that's more limited my abilities to network. And while I've still been able to do so, certainly would like to network with other investors. So please, reach out, and I think I'll be doing the same to others, but that I've been listening to as well. So
great, and we'll put your Gmail address in the show notes. People can just go there
okay.
and click it. Garrett, this has been great. So thank you for coming on the show. Thanks for sharing about your deal. I mean, this is always great for people to learn. So we appreciate it. Thank you so much.
Thank you. Thanks for having me. And just, one final note, great thank you to Jenny, because she's been super through all of this. And I sometimes worry that I'm a pain of a customer, because I will on a moment's notice be heading one direction or another direction. But quite frankly, it's been so fantastic and I've learned so much. And so just wanted to mention that.
Well, Garrett, I've really enjoyed working with you as well. Like I really like having our kind of philosophical investment discussions that will, we'll go off on tangents. And, I learned just as much from you as hopefully I'm able to give to you. So feeling is mutual. I've enjoyed it.
Awesome. Great. All right, everyone. Again, thanks for listening. You guys have questions, reach out to us, reach out to Garrett. The spreadsheets are going to be in the show notes as well. If you need help finding a rental property, reach out to Jenny. Have a great day, everyone.